Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 28th of August 2021. And we're looking at a controversial article published by Sunshine Profits some 2 weeks ago. Now earlier today we published two videos. Our Gold and Silver Weekly Update for the weekend in the 27th of August, where we highlight that gold and silver jumped on Friday and ask, is this jump going to continue or this rise going to continue into next week? And also 3 reasons why gold is not rising as it should. Now in this video, we're looking at another controversial article which could suggest that despite Friday's rise in silver prices, we could be heading for a major breakdown in the silver price, potentially to as low as $13. We're going to read the article in full as it's quite long, but nevertheless extremely descriptive and thought-provoking. So let's take a look at it now. Please share your thoughts and views as to whether you agree with the writer or disagree, and kindly give your reasons as to why. Silver price prediction for August 2021, published by Sunshine Profits. Probably, looking at the date here, published on the 13th of August 2021 or a day afterwards. With silver's long-term cycle implying a surge above $75 and even $100 over the next several years, the white metal's secular uptrend remains intact. However, with an epic collapse likely to precede the forthcoming renaissance, volatility presents us with ample opportunities. Case in point, silver cycles last roughly 2 years, and the turning points culminate with extreme volatility in both directions. Sometimes ferocious rallies follow, and other times the white metal falls off a cliff. In the here and now, with silver approaching the end of its current cycle, a supreme climax could be around the corner. Moreover, when we combine the myriad of technical and fundamental indicators signaling the same outcome, the white metal could get cut in half over the next few months. As for the short term, analyzing silver's historical fakeouts has proven quite valuable. For example, while many investors chase the white metal's upward momentum only to find little light at the end of the tunnel, I've warned on several occasions that falling for the seduction is an extremely costly mistake. And last week, while gold's performance was a major outlier, silver did not invalidate the breakdown below its 2021 lows, and similar to the gold miners, the white metal did not elicit any material optimism. As a result, further drawdowns are likely to materialize over the medium term. To clarify, in my view, silver is very likely to soar in the following years, but timing matters, and ignoring cycles, trends, and technical patterns is what could make people lose a lot of capital. To explain, I wrote on August the 2nd, as far as silver is concerned, the situation is also developing just as I described previously. Silver moved to its recent short-term high, while gold is not even close to being halfway back up. This means that on a very short-term basis, silver is clearly outperforming gold. This is also what tends to happen shortly before significant declines across the precious metals sector. Now, the sizes of both moves were not that significant, so this performance could also be more or less random. And if that was the case, the outperformance could just be accidental. Consequently, it's not a game-changing signal in terms of its importance. It is something that's on top of multiple other indications that we have, and the most important ones are not of a short-term nature at all. The long-term self-similarities in gold and the HUI or HUI index gold stocks are the true key to understanding where the precious metal sector is likely to head next, and you already know about those. Not only did the early indications prove to be correct, but we actually saw a fresh sell signal in the form of silver's fake out. The white metal appeared to be moving back above its June lows, but it was quickly hammered back down, and it ended the session a bit lower. Invalidations of breakouts are very bearish, and silver is known for breaking above certain resistance levels very briefly, with analogous action in gold and gold stocks only to invalidate them shortly, and it usually happens right before significant moves to the downside. The implications are clearly bearish, and more importantly, it's not the only confirmation that gold received. Please note that silver did not invalidate its breakdown to new 2021 lows, despite gold's strength last week. Neither silver nor mining stocks confirmed gold's rally, so it seems that it was gold's reaction that was fake. Silver's confirmed breakdown to new lows is likely to lead it to new lows sooner rather than later, especially given how similar the current situation is to the previous patterns that preceded big declines. For more context on silver's self-similarity patterns, I wrote previously, if you analyze the left side of the chart above, let's have a look at that, you can see that silver moved back and forth before breaking towards its September highs. However, after failing to complete the milestone, the white metal eventually collapsed. As a result, with the pattern on the right side of the chart, eerily similar, investors' optimism has occurred at what's likely the worst possible time, with its current behavior also mirroring 2008. Where silver fell below and then rallied back above its 50-day moving average before plunging, the white metal remains on a journey of self-destruction. If we zoom in on the white metal's price action 2008, you can see that an immaterial bounce also occurred right before silver fell off a cliff. If you look here, you've got the 2008 bounce and then fall, sideways, and then collapse. Final corrective upswing of early 2020 took place in very late February and early March, while the two normal tops that created the red line rectangle formed more or less at the turn of the year and in late February. This year, it's all taking place at almost exactly the same time of the year. Let's be realistic so far. The analogy to what happened in 2019 and 20 might seem too unclear to be viewed as a reliable base for making a silver forecast. But what if? What if there was a very similar pattern in the past that also preceded a massive decline? This would greatly increase the reliability of the above self-similarity. There was indeed such a pattern. That's what silver did in 2008 before it declined. The August 2007 to March 2008 rally, please note the interim top in November 2007, that's here, where the hand sign is, that was followed by a zigzag decline, more or less in the middle of the rally, is similar to the March 20, August 21 rally. Please note the interim top in June 2020 that was followed by a zigzag pattern more or less in the middle of the rally. Afterwards, we saw a double top in both cases that was followed by a sizable slide. Then silver formed a specific U-shaped broad top where the final top was below the initial one. Exception in this case, the forum-based rally took silver slightly above the previous high, but due to the specific random nature of the move, it doesn't count as something that invalidates the analogy. After the top, silver declined and the final corrective upswing took place approximately between the 50 and 200-day moving averages. Please note that in both previous 2008 and 2020 cases, silver then truly plunged, and it kept on declining until it moved below the 2.618 Fibonacci extension based on the initial downsizing. The above charts illustrate that by showing the first decline at the 38.2% retracement, applying the same to the current situation, the initial decline took silver from $30 to below $24, provides us with the minimum decline target at about $13.50. Will silver really decline as low? In my view, it's imperative to watch other markets for indications, as they might have more reliable targets, for instance gold. but I wouldn't say that this target or lower price levels is out of the question. Of course, that's just on a temporary basis. Silver will likely soar in the following months and years after this decline. Highlighting the effect of Wall Street's bets silver squeeze, the SLV ETF's volume spikes in 2020-2021. Nearly identical to the surges that we witnessed 10 years ago. If you analyse the chart below, you can see that the massive inflows at the end of 2012 not the beginning of a medium-term upswing. In fact, it coincided with silver's final bounce before the white metal suffered a major decline. If you analyse the volume spikes at the bottom of the chart, and you can see them here, these are the red ones at the bottom, 2021 and 2011 are a spitting image, in which they actually are. To explain, in 2011, an initial abnormal spike in volume was followed by a second parabolic surge. However, not long after, silver's bear market began. SLV volume-wise, there's only one similar situation from the past, the 2011 top. This is a very bearish analogy, as higher prices of the white metal were not seen since that time, but the analogy gets even more bearish. The reason is the initial warning volume spike in this ETF. It took place a few months before SLV formed its final top, and we saw the same thing also a few months ago when silver formed its initial 2020 top. In addition, the SLV ETF is also following the 2011 playbook. Back then, the SLV ETF recorded an initial spike in price and volume and followed that up with a parabolic spike in both that marked the top. This was then followed by one last spike in price on relatively average volume. To that point, if you focus your attention on the right side of the chart above, you can see that an identical formation is present. After initial spike in price and volume, the big one occurred in early 2021. You can see the spike here. And with silver's latest rally occurring on relatively average volume, the price action looks a lot like the calm before the 2011 storm. The third average top in 2011 was the final chance to sell silver above $40 and perhaps to short it. Could be the same right now. But with regard to the $25 price level, of course silver is likely to soar well above 50 and 100 in the following years, but currently the analogy points to lower prices in the medium term. The history may not repeat itself to the letter, but it tends to be quite similar. And the more two situations are alike, the more likely it is for the follow-up action to be similar as well. And in this case, the implications for the silver price forecast are clearly bearish. Based on the above chart, it seems that silver is likely to move well above its 2011 highs, but is unlikely to do so without another sizable downswing first. Similarly, silver's inverse price action also has bearish implications, nearly identical to the inverted formation that emerged from 2006 to 2009. Today's chart looks eerily similar to its predecessor. Whilst it's more of a wild card, the above pattern shows that silver's 2020 top plots are nearly identical to the inverse of the 2006-2009 performance. I copied the 2006-09 performance right below the regular price movement and inverted it. I also copied this inverted pattern to the last few years. The similarity is quite significant, and whenever a given pattern has been repeated, the odds are that it could also repeat in the not-too-distant future. Of course, there's no guarantee for that, but once the same market has reached in a certain way to a specific greed-fear combination, it can just as well do it again. And these similarity-based techniques work quite often. So while it's not strong enough to be viewed as a price path discovery technique on its own, it should make one consider some scenarios more closely. In particular, this means that the declines in the prices of silver, gold and mining stocks could be bigger and take longer than it seems based on other charts and techniques. The above is also in tune with the implications of the sell signal from the MACD indicator on the monthly gold chart. The only thing that comes to mind, which could realistically trigger such a prolonged decline, would be a major drop in the general stock market. Given what I wrote above, the latter is quite possible, so I'll be on the lookout for confirmations and invalidations of this scenario. If history rhymes, silver could be in for a profound decline over the next few months, beyond my initial target. Moreover, the development would increase the duration of the precious metals bear market, also beyond my initial forecasts. After all, gold did invalidate its long-term breakout above the 2011 highs, and the way gold reacted to a small upswing in the US dollar index was truly profound. And this article was written, and hopefully I'll pronounce his name correctly, by Przemysław Radomski, founder, editor-in-chief. End of article. Wow, well, I suspect that not many of those listening to this will have expected an article quite so potentially bearish in the short term. Even ourselves have given a sort of lower term price of around $20, though we have accepted there could be a further pullback to 17. This is going much, much further and really back to prices before we had that huge jump just around a year or so ago. Are they right? Well, time will tell. But meanwhile, it's always worth considering the opposing view put forward by the many scores of pumpers out there who are telling us it's going to the moon. One may be right, the other wrong. Both may eventually be right, or both may eventually be wrong. Generally, it's what happens in the middle that tends to be the norm. But let's be frank, with gold and silver having undergone such rapid declines and rises, almost anything is possible. Markets are affected by huge levels of stimulus and low interest rates. Equity markets and cryptocurrencies at this moment in time are seen as the favored investment home. Now please note that Sunshine Profits like us believe that the long-term silver future is rosy indeed. However, there could be short-term pain beforehand. Let us know if you agree or disagree, but either way, please give us a thumbs up or a thumbs down, but preferably a thumbs up. Subscribe, press the bell sign, because after all, on Illuminati Silver, you will get the truth about silver, however palatable or unpalatable it may be. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.